everyone, Brian here again, Practical Prep TX. Well, another day and another bank is on the ropes. So, as of last Friday, I'm sure you all probably heard Silicon Valley Bank had to get taken over by regulators. Basically, they were out of cash. There was a bank run, and they are done. So now they are under the conservatorship of the U.S. Treasury. As of this morning, this is Monday morning, March 13th, First Republic Bank looks to be on the brink as well. Last time I looked, their stock price was down like 60% overnight. And it prompted the U.S. government to have to get involved because they were really scared about what could possibly happen today, actually. So over the weekend, they were working, trying to figure out what they were going to do, because with Silicon Valley Bank, that was a big one. There's another one, Signature Bank, that's a smaller bank that also collapsed over the weekend. And that one had a lot of crypto exposure, but they're also not telling you it had a lot of real estate exposure too, which real estate has also been on the ropes the last 6 months with interest rates skyrocketing, which has made real estate really come to a screeching halt. But getting back to Silicon Valley Bank. So what happened with them actually is technically they didn't do anything wrong, actually, per the regulators. And the reason I'm talking about this is I have a pretty good knowledge of the financial system, being that I am a registered investment advisor here in Texas, and I have managed bond and stock portfolios. I've traded futures, contracts, options contracts. I mean, I've done a lot in the last 15 years. But getting back to Silicon Valley Bank, so they were holding their reserves in the Tier 1 capital that the Treasury and the federal government recommends. They had a lot of it in U.S. bonds. And now what they didn't do, which they kind of heavily loaded up on the longer term data, like the 3-year dated Treasury bonds. And they bought a lot of those bonds when interest rates were at rock bottom, were at 0%. So they went out 3 years on a 3-year loan on those things to get those bonds because they wanted a higher yield, a higher interest rate. They wanted to make more money on their customers' deposits. So they went out 3 years on those instead of just getting like 6 month or 9 month or 1 year bonds from the Treasury, and which they could turn over quickly. They don't lose value. Those shorter term ones don't lose as much value when interest rates rise and fall, or they don't gain as much when interest rates fall, and they don't lose as much when interest rates rise. But they bought a lot of 3-year. Now, when you buy those at 0% interest and interest rates go up dramatically like they have, those lose value. Why? Well, just kind of a beginner's tutorial on bonds is when you buy a bond, you're basically giving somebody a loan in $100 increments, let's say. So you get a loan for $100, or you give a company a loan for $100, or you give the U.S. government a loan for $100, and they're promising to give you not much, at least not 7 or 8 months ago. They were giving like 0.2% interest for 30-day, or I'm not sure the exact rate it was, but it was very low, near zero. Now let's say you get it, instead you want a 3-year because wow, the 3 year is giving us 1% or 2% on our money at least, so we can let the government borrow our money for 1-2%, and at least we're getting some sort of return. Now, the problem is when the Fed lowered interest rates down to, or they raised interest rates, they raised interest rates dramatically. Well, who wants to, if you have to sell that bond now, it still has 3 years to mature, so you're not getting your money back for 3 years. But if you have a run on your bank, which is what happened with Silicon Valley Bank, they needed to get access to capital quickly. So they had to sell those bonds that they were supposed to hold for 3 years to maturity. They had to sell those. Well, what investor is going to buy that bond off you for that same $100 and give you your $100 back when that bond's only offering 0.2% interest, when they can just buy one in the open market and get 3% right now? So they have to discount that. So instead of selling those bonds for $100 each, they have to sell them for 70 cents on the dollar, or $70. Hence, they lost 30%. So they had to sell all those bonds. They lost 30%, and that absolutely killed their available capital. And their capital ratio went down, and it's like a snowball effect at that point. More people see you're taking, you're hemorrhaging losses on these bonds. the more people want to come get their money. That's what happened. So there was a bunch of people who just said, get your money out of Silicon Valley Bank, and that's what happened, and here we are. And we're starting to see that now. Looks like in First Republic Bank, which they came out with a message today saying, oh, no, looks like no one's trying to get their money out. Yeah, well, stock price doesn't lie. So we'll see how that plays out. But the federal government did come out and say, because they were panicked over the weekend, with I think it was like over 90% of deposits, it's being reported, in Silicon Valley Bank were over the FDIC insured limit, so over $250,000 per account, which means all that money would have evaporated, basically, and companies need that money to make payroll. It was even rumored that there's a lot of apps on QuickBooks where the payroll apps weren't going to work anymore. So the federal government had to do something. Well, they feel like they had to do something overnight, which is what they did. They, in essence, came out. They're saying it's not a bailout, but it really is a bailout. They're bailing out all the insurance, or all the people who were underinsured, who had more than $250,000 in those banks. They're going ahead and guaranteeing that. So everyone has access to their money as of today, they said, which is Monday. So how is that not a bailout? I mean, they're giving taxpayer money to people who had over $250,000 in their accounts, which they weren't supposed to be insured. So are the banks getting the bailout? I mean, you could argue no, but are the depositors getting the bailout? Absolutely. So they're also announcing, the Fed and the Treasury announcing a emergency lending facility, because they're worried that people might try to make runs on other banks because they're worried about the financial system. So they're giving any banks, credit unions, access to emergency loans from the federal government to cover any deposits, or if people trying to withdraw their deposits, to cover those. Now they're saying it's a loan, so you have to pay it back. And they're only giving them loans on those bonds, I believe U.S. government bonds. Now, don't quote me on that, but that's what I'm reading that's rumored. So the same, and I can see why they would do that, because if you're the federal government and banks are buying your bonds and they're becoming insolvent overnight because of government bonds that are losing value, you can see the problem there. Who's going to want to loan the U.S. government money if it's that risky? So the federal government's coming to the rescue to save the day. Now, is that a direct bailout? I mean, you could argue no, but are the taxpayers on the hook? Absolutely, because when all those bonds continue to go bad, they're just being transferred to the federal government. And if the bank does go bankrupt, the federal government's still on the hook for it. And who's the federal government? Me and you. So we're not going to be necessarily like directly taxed for that, but we will see inflation go up. So, inflation's already out of control. So you can expect more of that to come in the future. So unfortunately, that's the world we're in. I do own quite a bit of gold and silver. And I actually started getting involved with a new currency called goldbacks. So here's a goldback. What these are, they have different denominations. This is 1/1000th of an ounce of gold actually infused into this thing. So it is a paper currency you can use, and it's accepted in a lot of states actually as legal tender. You have to check and see on their website if it's for yours or not. But here in Texas, they're legal to use as barter. So I have used some of these with people locally who want to take gold, real money, instead of the fake fiat that we're going to continue to see devalued. So I'll leave a link in the description for where I get these. And they're actually really cool because they're in small enough denominations where you can actually use them to transact for like small transactions. So you can't take a gold coin that's worth, as of today, $1,900 and take that to the grocery store or to your neighbor, right? But these you can. This has only got like $3 of gold infused inside it, and it's worth, I think, $4 right now. You can go to goldback.com and you can see exactly how much they're worth. But I'll leave a link in the description to where I bought those. And it is an affiliate link, so it should take you right there. I don't think I can get you a discount on these, even though being an affiliate, but if so, I'll put it in the description down there for a discount code. Also, I want to discuss, what am I doing right now with all this financial chaos? So what I'm doing is I make sure I have enough cash on hand to last me easily 30 days. And if you can, even more than that, in a safe place where you can get to quickly. Besides that, I do own a lot of gold and silver personally. Mostly silver, actually, because I'm more for the small denominations that I can actually use rather than, it's hard to use. It's really hard to use gold just because it's worth so much money in such a small quantity. But silver's a little more transactable. So I have that. And also the gold backs that I recommended. I have a lot of those too as well. So, I mean, it's an insurance policy. I mean, hopefully this banking issue gets sorted out. In my opinion, it's not going to be a crazy panic. Now, I mean, I could be wrong, but my opinion is we'll just see higher and higher inflation, and they'll be able to paper over the problems by printing. It's worked for a long, long time. It's starting to show cracks in that foundation now for sure, but I do still think there is more time to prepare. So that's why I started this channel, to help other people prepare for what's happening, which a lot of this stuff seems crazy, but you know, over the last few years, I think the preppers have shown that they were correct. Now, another thing I do with my money is I actually use the infinite banking concept, and I'm also a licensed agent who can put people in those policies as well. But I use that, so I'm not sweating this out, because most of my cash is in those, which is basically a long-term whole life insurance policy that's got basically designed for a high yield, and a place where I can park my money and get to it as well when I need to in the form of a loan. And the reason I did that was because I've always been concerned of the financial system, of the banking sector, and I'm sick of them, just the way they charge huge interest rates on credit cards. They give you basically nothing in interest. Basically, they just use us, and I had enough of it. So I went ahead and did the infinite banking concept, and that's where I put literally like 90% of my cash are in those. So, and they don't use or practice the fractional reserve banking, which is what leads to bank collapses. They don't have the money to give back to you. They take your money and lend it out and try to make a return on it. So the infinite banking policy, you don't have that concern, and it is insured by your state governments. Actually, they all have some sort of state guaranteed insurance fund. So it is protected as well, up to a certain amount, and you have to check your state on what that amount is. But that's what I use. That's another thing I do. So I would definitely recommend cash on hand. Have enough cash to at least make it through 30 days and longer if you can. I use gold backs as a form of a currency that I can trade, at least locally here, and that's why I try to build a network of people who will accept those. And 3, gold and silver, physical gold and silver on hand as well. So those are the things I'm doing, and I do actually, or I can place you all in a life insurance policy like mine, designed for infinite banking as well. So if you'd like that, go ahead and reach out to me into the comments, or just look me up. I'm also on Twitter at practicalpreptx, and you can direct message me there as well, and we can discuss if that's right for you. It's not right for everybody, but it was right for me. Anyway, that's it for now. Hopefully you found this informative. If you did, hit the like button, subscribe to this channel. It is new. This channel is focused on helping the average person secede from the traditional system as much as possible, and that's in banking, energy, water, medical, all of that, and what I'm doing on my 15 acres to try to prepare for what's coming. So anyway, that's it, everyone. Thank you very much.